one of the first efforts is an exploratory session and a discussion where we can really get to know each other. I can get to know the business, and specifically as it relates to the business, what sales channels is a company in? What support structures do each of those sales channels need? What do the costing sides of those sales channels look like, and how does the team generate revenue? Through those sort of like subjective real life discussions, you can really parse out what it is in real life that drives the business, and from there take the combination, let's say, of the discussions with the key leadership at the company and the data that they can provide, whether it's the P&L statement or other data sources straight from their various sales channels or CRM systems, and really begin to understand the details of what some of those drivers are. I think sometimes in positive times, in times of high growth, we start to spend a little more loosely to chase some top line, and these can be the opportunities when the top line starts to perhaps stagnate or the growth starts to slow, where understanding some of those pieces is really important. Similar to cash flow, just understanding what kind of terms other competitors get from a benchmarking perspective, and how you can optimize your payables timing, and how you can be more efficient with your receivables beyond the top line and understanding the sales drivers, understanding expenses, and structures that can work around cash are hugely effective or influential on business success. To see where you are now and what your strengths are, but also to think critically about what else is possible, whether that's expansion into a new sales channel, or getting deeper into a vertical within a sales channel to save some costs. Especially startups, if I were to use a direct-to-consumer company, for example, and they start as a direct-to-consumer company, and that's where they made their first splash, and that's where they found their initial success. Direct-to-consumer is getting more expensive now, and buying new customers through ad spend is much more expensive. And so I think the reality for a lot of those types of companies is that they need to explore other ways to move the product. If you're brick and mortar, learning the direct-to-consumer business and understanding what drives that business and how to sort of spread your net a little bit wider was critical. And in the reverse, for newer direct-to-consumer companies who had a lot of success with lowish acquisition costs relative to right now, the reality is becoming that they might need to explore wholesale channels, or they might need to explore distribution partners, or things like that. Just continuing to look outside of what you're currently doing and be aware of what's possible. In down times and changing times, I think it's the most critical thing to be able to do, is to look with eyes wide open. If you're not really getting into the weeds of it and understanding some of these pieces of information, you'll probably just keep trying to spend your way out of this game. And as profitability dwindles, it's harder to understand why. So I think that with proper data analysis, and I've experienced this with multiple clients just in the last year, you can actually start to highlight how things maybe are not as profitable as someone thought they were. And you can start to explore other opportunities. Where else can we talk to our customers? But I find that it's hard to have conviction or confidence to pivot if you don't have the data. You're likely not going to. But that Peter Drucker quote, something like, "You can't manage what you don't measure." That's definitely, I think, one of the most critical quotes when it comes to business. Yes, certainly finance and accounting it's sort of like, as a company is growing, maybe in startup mode especially, and they're so focused on, driving the top line and getting the product out there and working with customers, that it's like, let's just get the accounting done, let's get the bookkeeping done. I'm comfortable as long as, you know, we're closing the books every month and I've got a P&L to look at. But in those types of situations, the finance and accounting arm of the business really can't provide like the value add, I think, that a finance arm could and should provide when it comes to being the creator of the drivers in conjunction with, you know, the other parts of the business, but being sort of that voice to support the importance of data collection and reading data and understanding kind of what it means for each function in the business. The analysis of a specific channel, for example, that's starting to slow in terms of sales or margins are tightening, can be the catalyst to have a discussion about what are our other options. Now, if you can save 5-10 points by forcing a discussion that might not have happened otherwise, that's how you turn around a business and also make it more attractive.